Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby, to the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I've made it my mission to help you guys own it. Me and Fat Man Zoom. Guys, we have such a jam-packed day today. Spotify earnings, Facebook, Meta platform earnings, whatever you want to call it, are after hours today, and we're going to give you our live reactions. But first, before we get into any of that, as you guys know, we got the starting five, which is Genco UK? I don't know. Genco 6 UK, Savvy Money Show, Ralph Vandenhoek, Housekeeping. You guys are our starting five. Welcome. Did I get 5? 1, 2, 3, 4, and Jeff Ponica. Sorry. I cannot count today, apparently. But welcome, guys. You are the starting five. If you guys didn't get to the starting five, make sure you show up early. Hit that notification bell, because if you do, you just increase your chances of getting into the starting five. So anyways, guys, thanks so much for tuning in. We certainly appreciate you coming in here and hanging out with us every single afternoon. It is so awesome. Yes. Okay, let's go ahead and do that. Fat Man Zoom's quick update here. Surgery is still on and ready to go for tomorrow. It'll be 8:30 a.m. Eastern time, I believe is right around when it's supposed to take place. It's supposed to be around 5 hours. So by the time I'm live with you again tomorrow, I should have an even bigger update, hopefully, fingers crossed. Yeah, that's kind of it. It's been a little bit of we're just going to sit and wait here for right now. But he's in good spirits. He's having a good time with some of the hospital staff. He's been dancing and goofing off and doing all kinds of stuff, which has been great. I mean, it's great to have those positive vibes going into this, and it's gonna be a challenge. It's gonna be a challenging time, obviously, after the fact. But like I said, we'll get through it, and it's gonna be all right. So that's really all I have. I don't have a whole lot left to give you, and I really will know more tomorrow, which hopefully Freddie Valoy will be with me tomorrow. I saw Don in the chat. Freddie Valoy will be with me tomorrow live as well to provide us with some comedic humor and all that good stuff. I keep saying all that good stuff. Why do I get so fixated on sayings like that? Right? Like, do you remember last year? I couldn't stop saying that being said. I said that being said like so many times, and now it is all that good stuff. I don't know why I get so caught up on stuff like that. But anyways, that's all I have. That's all I have for right now, and I'll just keep you updated. The more I know, when I know, you will know. So, and whatnot. Yeah, says housekeeping. A new drinking game. Yeah, I like that. I like that. But guys, who's pumped? Who is pumped for the cheapest FANG stock to report their earnings? And I say cheapest because it is the cheapest if you go by forward PE. Facebook or Meta platforms, formerly known as Facebook, has a forward PE. Just checking here as it's moved. Forward PE of 23. So it's moved up a little bit. It was up to around or down to around 20 times next year's earnings, which was by far the cheapest. The second cheapest coming in was Alphabet, based off of PE, and that stock has done extremely well. Obviously, lots of things to be excited about there with Alphabet's earnings yesterday. The 20-for-1 split, everybody was going crazy on that, and it's done extremely well today too. The overall market, though, has been interesting. We'll get into those earnings. Everything's green across the board. The S&P is up around 1%. Dow Jones is up around 0.75%, and NASDAQ is up around 0.5% as well. It's been an interesting dynamic to see things play out today, though, because all of my defensive plays are extremely green. And when I say defensive, I'm talking about things that that are worth owning in an environment in which we are seeing right now with the potential rate hikes and inflation. Now we do have, I believe, isn't it CPI numbers are tomorrow, or is it just no? It's I might be wrong about that. I think it's CPI on Friday. Somebody correct me. I thought CPI was this week. So that could be a reason as to why we're seeing a little bit more of a rotation back into some of those defensive plays. So for those of you who don't know what I own, I have United Healthcare is a good defensive play. Healthcare is always going to be that. Some of the industrials, energy. My marathon oil trade is just going absolutely apeshit. 52-week highs again today for marathon oil. Energy, it looks like $90 is going to hit this week. So $90 a barrel, just to be clear, is going to hit this week. So I think that marathon oil is going to continue to move because of that. So another defensive play there. And then also, oh shoot, it just escaped me. Oh my gosh. What was the other one? Oh, Spirit Air Systems is another one that did extremely well today. If you guys don't know Spirit Air Systems, they build parts, fuselages, ailerons, all kinds of stuff for Boeing and Airbus. So they're doing extremely well today. So the defenses are rocking. Tech is still hanging in there. It's not, they're not red. My Microsoft trade is doing really well. It's up about 1.33%. So not all of tech is bad right now. I think some tech is kind of taking a little bit of a backseat, but overall it's been kind of sort of boring, except for some of those plays that I just mentioned. So it's interesting to see the dynamic here. We've seen some really fantastic earnings from large cap tech, from Facebook, from Microsoft, from Apple. Obviously, Alphabet yesterday was fantastic. Netflix shit to bed, as we all know, but that's on the rise again after Bill Ackman dropped $1 billion on that sucker. And so I think that we could see this continue with Facebook. I mean, Facebook is, reacted in tandem to the Alphabet news because of how closely related they are as far as digital advertising is concerned. They're both giants in that space. So Google came out basically, I don't know if they really surprised anybody by the numbers as far as digital ad spend was concerned, but it was still great. It was another record quarter for Alphabet. And so it was just made all the sense in the world to see something like Meta Platforms respond in line. So that's going to be key, right? Now, I know that the headline's probably going to be, how are we on the development of the metaverse? Because that's what Mark Zuckerberg has essentially just gone all in on with massive investments in this space. And the thing of it is, though, while it's so hot right now, while everybody's talking about the metaverse, this is still a 10-year plan for Mark Zuckerberg and Meta Platforms to get this to a point to where they think that it could start actually making the money. So we have a long road ahead of us as far as that's concerned. I know that a lot of people are going to be curious about that in development, but it just hasn't been enough time, in my opinion, to really get excited about it just yet. I could be wrong. Maybe they come out with something that could move the needle for Meta Platforms. But really, I think the meat of it here is going to be their growth. Is it going to be enough for investors to get excited about growth, and how are we expanding as an economy? I think will be reflected in how much they grew in digital ad spend. So those are really closely tied together. Let's take a look at the chart to see how it's doing right now. There we go. So now it's trading in the green here, still just slightly. You can see, though, pre-market and after hours, it was rocking in reaction to the Alphabet earnings as a sympathy play. And you can see it obviously cooled off a little bit, and it's starting to make a move back into the close. They have estimated earnings per share of, I have it here. Whoop. Hold on. Come on. There we go. Estimated earnings per share of $3.84. The revenue estimate is $33.41 billion to be exact. So we'll see if they come in and beat those earnings. And I think they do. I don't think that there's any question that they won't beat those earnings. Again, it's just going to be the outlook here. Do they see growth going into 2022 in their fiscal year? Again, I think that there's a lot of reasons to be positive about that, and why I think that they could give a really nice outlook. But we'll see. As we always know, earnings are always a crapshoot. There's always a 50-50 chance it's going to go up or down. They could come in and have solid earnings, but then the outlook isn't great, and then the stock just gets punished. Or they don't beat earnings at all and downgrade their guidance. And then you see something happen like what happened with PayPal yesterday. That got absolutely wrecked. It's still getting wrecked. It's down 24%. This is crazy. Remember, I talked to you guys yesterday about this after the earnings reaction to PayPal. This came down, and I said, if this gets to 125, we're talking about pre-pandemic highs right now. So let me just bring you back over here. This is PayPal at 125. This was just before the crash of 2020. And so that would be crazy to me. We got really close. It got to 129.01 as the low today. Is PayPal a buy right now? I would say that to me, it seems as if there's probably a likelihood that this does come down lower to maybe test this 125 area. But man, you got to ask yourself what the risk reward here is. And I think it is very, very good. I mean, oversold's an understatement, obviously. And, the outlook wasn't really painted with rose glasses from the CEO yesterday. The conference call didn't provide them any favors. But I gotta say, I don't know if I can see PayPal going too much lower. And like I said, I think the risk reward here is good. But this just shows you how stocks have been getting absolutely punished when they come in and don't talk about, raising their guidance or keeping their guidance, or they pull their guidance or lower it and they just get wrecked, right? I mean, another good example of a stock that didn't have horrible earnings, but it still got punished because of their guidance was Netflix, right? We saw Netflix get trashed and was down 50% from its all-time high. Obviously, it's made moves since, as I mentioned earlier, since Bill Ackman came in and dropped $1 billion on it, and it's done really well. Obviously, correcting a little bit, it's down around 5% today. But I mean, man, this is one that I think also got punished because of their outlook and kind of talking about a slowing of growth. To me, I think that's the risk that could be facing us if Facebook comes in and says anything to that end. But you can see here, I have this nice rising wedge drawn out for you guys, and it's starting to move back up into that. So we have, some potential for a really nice breakout if they have good earnings. If they don't, it will get ugly. I mean, ugly. So hopefully that's not going to be the case, and we'll see Facebook do really well. Next up, we have Spotify, and Spotify has earnings as well. This is a stock, though, that is at even riskier levels, in my opinion. I think that if you look at Spotify as a whole, obviously we saw a lot of drama from Joe Rogan and Neil Young, and all of that going on with misinformation, being spread, and Spotify took action. They talked about putting disclaimers on controversial topics, and specifically with content revolving around COVID-19. And so, was that enough for investors to be like, okay, we accept this. We'll have to see. Right now, Spotify is down quite a bit. It's down around 6.5% just today. So I'll show you guys the chart in a second, but I really kind of just wanted to cover this real quick as well. We take a look at their expected earnings per share. It's a loss of 48 cents. Estimated revenue is around $2.98 billion. So we'll just call it $3 billion. I think that there's a possibility they come in above $3 billion. I think that that's a real possibility, and I would love to hear that their path to profitability is going to be much better here. A loss of 48 cents per share in the environment that we're in. That's why I was saying it's very risky. So it's a company that, they're continuing to grow, and they spend a shit ton of money, and they're growing at all costs, it seems, but still can't seem to get up over the hump. How are they going to monetize this platform to make them money? And when you're in an environment where we're talking about the Fed raising rates and all that good stuff, these are the stocks that continually get punished. Is it undervalued at this point? Has it been punished enough? I don't know. And I think that that's going to be answered for us today, especially if they come in and speak to anything revolving around a slowing of growth. I'm looking at the statistics here on this stock right now. Their market cap's at 36 billion. Price to sales is around 3.6. So 3.6. Yeah. So not really that expensive, I don't think, just from a fundamental standpoint. So it is on the cheaper end. But again, we still have to have that conversation of just they're not making any money. And what does that look like for the stock moving forward? Oh, did I say it? All that good stuff. Damn it. I love this. You guys, did I say all that good stuff like 4 times? Did I really say it 4 times? But thanks for that. I appreciate it. Keep that coming. Thanks, housekeeping. Thanks for keeping me honest. But we take a look at Spotify's stock, and you can obviously see that it got punished since the highs, and the highs here were quite substantial. It's trading at $190 a share right now. It was up as high as what was this? 400, 372, 376, thereabouts. So really come down a ton. So has the stock been punished enough? I think that there's certainly, you can certainly make the argument that it's priced in at this point, you know, as much as it's going to come down. And I think that there is an argument they can make that it's actually finally come to a reasonable level to be bought up. But again, you know, we're going to have to see how this shakes out. It looks as if those numbers are in and the stock is actually tanking right now. It's down 11%. And this is exactly what I was talking about. This is rough right now. Wow. Jeez. Okay. So Spotify right now is trading down now down 12.5%. I can't even keep up with the speed in which this is selling off at right now. Holy cow. Let's check in with Facebook or Meta Platforms right now. No movement out of them just yet. So let me go ahead and try and pull up Spotify. See what's going on there. That selling is still accelerating. Jesus. This is playing into exactly what I was talking about, though. Like, something is in those earnings that people don't like. They either missed earnings or they're talking about slowing of growth. Their outlook wasn't great. Something's happening here, and this is kind of like the theme right now. These stocks that can't show growth get absolutely punished. Absolutely punished. It's terrible. Checking out earnings here. Anything? Let's see. I'm just looking up. The stock's still coming down. Oh my goodness. It's now down 14%. Let's see here. I don't have any numbers as of yet. As soon as they come in, I will certainly give them to you, but nothing yet. Trying to pull this up. Looks like they might have missed. Monthly active users missed. There we go. Spotify's monthly fourth quarter monthly active users, 406 million. They came in 100,000 less than the expectation. The estimate for monthly active users was 406.1 million, and 406 million was the actual. I'd be surprised if it got punished because of that. Let's take a look and see what the earnings per share was. I mean, like I said, though, you just never know. But man, this is getting absolutely killed right now. Absolutely killed. Checking in with you guys on this. See if anybody else is sharing some stuff. If you guys get the earnings before I do, certainly let me know. Qualcomm also had earnings today. I think Qualcomm and was it the Match Group as well. We can take a look at those. Yeah, Qualcomm. It did look like it spiked all the way up to 198. It's barely green right now. Let's see here. All right. Qualcomm is interesting price action here. Interesting price action. Although it's not really all that surprising to see Qualcomm move like this, just given, you know, the earnings that we got from Apple. You know, here we go. Alexander's got them. Thank you. Sees second quarter revenue, 10.2 billion to 11 billion. Whew. Estimated was at 959. That is a really nice beat on that, on revenue. Man, that is crazy. Really nice move on that. All right. Still trying to find out actual numbers for Spotify. Actual earnings per share. Let's check back in with the chart there on Spotify, as Qualcomm is actually starting to move back down too. Spotify is now down 17%. Whoo! Getting ugly out there, folks. Kathy Wood does Kathy Wood buy this dip? Curious, do they buy this dip? I'm curious. Looks like they might have missed. Okay, here we go. Loss of no, they didn't miss. So the Spotify earnings came in a loss of 21 cents. The estimated was 39. So that's actually a really solid beat on earnings per share. Revenue came in at 2.69 billion. So they beat on revenue as well as the expectation was 2.65. Does this move really have everything to do with monthly active users? That is crazy if it is. Total premium subscribers 183 million. Total monthly active users was 418 million. So I'm getting some mixed numbers there because I think maybe the number actually is 418. But this, I don't know. Well, I'm curious to see what their outlook is, because if the outlook sucks, then that maybe explains a lot. But to basically come in line with their monthly active users, I mean, the stock's just getting crushed. It's now down 17, almost 18%. I wonder if this starts to feel like how do I put this? Like a Netflix type of event, right? Where this just comes down so much that somebody comes in and just starts buying the shit out of it. And again, there's got to be it's still early. We don't know what's going on as far as their outlook is concerned, but there you have it. Spotify came in and beat on earnings per share pretty handily, I might say. They also beat on revenue pretty handily, but the monthly active users seems to be what's killing the stock right now. And it has everything to do with growth as well. So you can't dismiss that. You can't underestimate that. Looking in at Facebook, aka Meta Platforms, that's now down $200 to $270 after closing at 323, and it's down 15%. What the fuck? Damn. Guys, what is going on with Facebook? Wow. Holy hell. That is insane. Monthly active users for Facebook was up 2.91 billion, up 4% year over year. Daily active users 1.93 billion, up 5% year over year. Estimated earnings per share were, like I said, 379. They came in at 367, so they missed on earnings per share. The revenue was 33.7 billion compared to 33.2 billion, so they beat on revenue but missed on earnings per share. Wow. They said that they see headwinds from increased competition for a time. That is not good. And this is exactly what I was talking about just before they reported earnings. If you guys recall, if you guys showed in at the top of the show, I talked about that if Facebook comes in and says, we see some sort of slowing of growth, then they're going to get punished. And not only that, but they missed earnings per share. This is terrible. This is bad, really bad. And this is actually kind of shocking when you think about what Alphabet just reported, right? Unbelievable earnings for them. They're kind of in the same space as Facebook as far as digital advertising is concerned. So you would have thought that this would have made a really nice move. But my God, this is still getting absolutely hammered. It's down 16.5%. Meta Platforms is getting crushed. So that's 2 for 2 on getting crushed. Spotify is continuing to sell off here on missing on monthly active users. But they beat earnings per share. They beat revenue. They just crushed on the earnings. But this is a classic case of they can crush earnings, but if the outlook isn't great, this is what happens. Any hints of slowing of growth, and this is how the stocks are going to react in this environment, guys. Man, what an absolute drubbing of Spotify. Checking back in with Qualcomm, I'll get you guys those numbers here. Qualcomm is now down still as well. It's down 7.5% on their earnings reaction. Let's pull those up. Qualcomm. Earnings per share for Qualcomm is $3.23. Estimated was 301, so they beat on earnings per share. They came in and beat revenue as well at 10.71 billion. Estimated was 10.42, and they increased their guidance to $2.80 to $3 per share. The estimate was 249. Quarterly guidance calls for 8.7 billion to 9.3. All that looks good. Not really quite sure why the sell-off here. There's got to be something else in that report, but the numbers on the surface right now look pretty damn good. They look pretty damn good. as far as Qualcomm's concerned. Not really quite sure what's going on with that as far as Qualcomm goes. Man, that is really tough earnings today. Scott Sherwood says Spotify not giving annual guidance, but will give quarterly guidance. Maybe that's why. I don't know, man. This seems a bit crazy for it to be down 21%. But again, this has just kind of been the theme of this earnings season, where you got tech stocks that just continue to get crushed if they hint around anything that has to do with a slowing of growth. Checking in with Facebook, they missed on earnings per share. They came in and beat revenue though, and cited competition and potential slowing of growth here. And this is why the stock is getting hammered right now. It's down 18%. 18%. Facebook is down now. Unbelievable. This is wild. Oh man. Yeah. Was that Sykers? Says this makes me want to sell Amazon before earnings. Yeah, I mean, it's certainly concerning, just given that is wild. This is crazy, guys. If you guys are just tuning in, we got about 229 of you guys in here hanging out with us. Hit that like button if you haven't done so already. We got about 39 likes, which is a bit on the weak side, if I'm honest, with 229 people in here. Hit that thumbs up. Certainly would appreciate the support. Speaking of support, if you guys aren't a part of the Chaos Crew and haven't hit that join button yet, please consider doing so and supporting the channel and supporting the studio you see behind you, and supporting the content that I shell out, Fat Man Zoom shells out every single day. It is the only way that we get to keep doing this is if you guys are part of the Chaos Crew. You get a watch list from us if you are part of the Level 1 Chaos Crew. A watch list every single day that I put out before the market opens. And it's a great community to be a part of. You get access to Discord, you get all that good stuff as well. And I just said all that good stuff. Somebody tell me to drink. But Level 2 also gives you access to my portfolio as well as a private live stream throughout the week that you can ask questions. And it really is a nice it's just a different dynamic than this live stream. We get to kind of chill, just shoot the shit, talk about life, talk about stocks, whatever. So it's a great time. And again, like I said, it helps support the channel. So hit that join button next to subscribe, or you can go to Own the Chaos and ownthechaos.com and sign up there as well. We'd love to have you guys as part of the crew. Looking at Facebook right now, it is still getting absolutely hammered after they missed our earnings per share. They came in and beat revenue, but then they also cited increased competition. And that, as far as growth is concerned, that is why the stock is continuing to sell off, and it's down 18%. This to me seems like a solid overreaction, textbook overreaction. And again, this to me seems like something where I could see this being a Netflix type of reaction. We're going to continue to see this get sold off. I mean, look at what happened with Netflix. And granted, right? What saved Netflix? Why did Netflix bounce like it did? Let's look at the daily chart here. Why did it bounce? Well, you could argue that the initial bounce was because of Bill Ackman dropping $1 billion in Netflix. And so that could, be the difference maker here between something like this and maybe what Facebook does in the future. But you can see too, Netflix didn't just stop selling the first day after poor earnings. It continued to sell off for the next week and didn't really start to move again until really this week. So I think that, there could be more pain for Facebook holders. I'm just blown away. This is another one that I'm really shocked about because it's just so cheap. It's just so cheap from a PE standpoint. This is one I got wrong, guys. I'll fully admit that this is one I got wrong as far as the direction of Facebook. To me, I thought that this was one that I thought, because it was so cheap from a fundamental standpoint, and it deserved to be at a higher valuation, that, this would be one to own. But this is kind of ridiculous at this point. I see Anthony McCarthy says 245 would be a gift. I think I saw Mike Hudson in here talking about 245 being a good solid pickup as well. Let's take a look at the daily chart and kind of see where we could potentially see Facebook tomorrow. So right now it's sitting at 263, which is right around here. 264 ish. So let's mark a couple areas here. So we'll draw a support line right here on Facebook. That's at 254. Very likely we could see that tomorrow based off of the reaction that we're getting right now, unless they come in their conference call and say something spectacular. I just don't see how we see any other reaction from Facebook in the morning. Let's draw another line potentially here and see where we go with that. Let's see. If it doesn't hold 254, I see where you guys are saying 245. That's certainly a likelihood as well. So you got 254 and some change, and then you also got 244 and some change, 245, we'll call it. That's possibly where Facebook could come down to and again, like I think that could be an area where I would grab Facebook with both hands if it came down to that area. I mean, I'd be loading the boat on Facebook, honestly. I mean, that's crazy. That is crazy. Now, you can make the argument, yeah, well, they talked about slowing of growth, and I get that, but man, this is just a crazy overreaction in my opinion. I mean, what's this going to bring the 4 PE to? What was it at 23 at the close? 23 times next year's earnings. If it comes down to 240, 254, and even 245, well, what are we talking there at that point? What are we talking at that point? Like 14, 15 times next year's earnings? That's crazy. That's crazy talk. So to me, I see a lot of people looking at buy the dip on Facebook. I think that there will be a time to where it does need to be bought up. And look, if you don't want to try to time it, that's fine. You could just try to work your way into this. I wouldn't go all in on Facebook tomorrow because I think there could be a potential dead cat bounce. So I don't want to just speak in absolutes and say, yeah, that's definitely happening. But man, this just seems like a crazy overreaction to me. And it does seem to be initially, we have to dig a little bit deeper, but now the stock is down 20%. Facebook's down 20% after hours. It's now down further than Spotify is right now. And Spotify got punished because of growth concerns as well. Spotify is now sitting down at 17%. And Spotify doesn't make any money too. Just putting that out there. Not that they're comparable at all, but I'm just saying, like, just the reaction here, you just wild, guys. Absolutely wild. Qualcomm also had earnings. They came in and had a stellar quarter. I don't understand what's going on with Qualcomm, why the sell-off here is taking place. This is definitely, in my opinion, a buy the dip opportunity with it being down 6% after hours. I don't know what the outlook was. I haven't quite seen that just yet. But Qualcomm's earnings, out of all the earnings that have been released this afternoon, this is the one that shouldn't be down here, in my opinion. Shouldn't be down here. I think that this one actually probably opens the day tomorrow green. If I had to pick one, this was probably one that does it. Those earnings were spectacular, and I can't imagine that they give any kind of poor guidance. Again, I could be wrong, but I just can't imagine that. So to me, I think this is definitely a buy dip opportunity on Qualcomm. Like I said, I don't think it would be a surprise if this opened up green tomorrow, because this seems like a ridiculous overreaction. I imagine it's probably has something to do with the chip shortage, and they're talking about that and it continuing to be a challenge, blah, blah, blah. But I mean, come on, the worst of that is behind us. Qualcomm's going to continue to get bought up. That's one I'm not really all that concerned about. Facebook, though, Meta Platforms, what the actual hell happened with that? What in the actual hell happened with that? Now down to 260. Now down to 260. SPY. So John Lyman says SPY and Q is tanking after hours. Yeah. Well, no surprise, right? I mean, Facebook's heavily weighted in both of those. So yeah. I see a lot of people asking about Amazon. Should we be afraid for Amazon tomorrow? I don't know, guys. I mean, I think that Amazon's been punished enough as well. Although I just said that about Facebook, right? I just said that about Facebook. Let me pull up Amazon real quick, and let's take a look at that. Got 285 of you guys in here. If you haven't hit that like button yet, please do so if you're enjoying the stream so far. But I'm looking at Amazon. Let's take a look at that, the Amazon chart. And that actually is suffering as well as a result of what's going on with Facebook. I don't know, man. I think that Amazon is got so much else going on that isn't impacted by whatever Facebook's doing. Yeah, they have digital advertising and that sort of thing. But they got so much going on. The e-commerce side, what I'm encouraged by with Amazon and why I think Amazon's got a good risk reward here is because of the AWS platform and because of what we heard from Microsoft, some of the other clouds, some of the other platforms that are heavy in the cloud space, Alphabet also in that conversation. They all had really good things to say about the direction as far as cloud storage and cloud computing is concerned. So that's the biggest part of Amazon's business, AWS. I think that could be the savior for Amazon. I don't know what it's going to look like as far as e-commerce is concerned or what investors are going to be looking for. But to me, I think that there is good risk reward here with Amazon, especially given just how much this has come down. But we'll have to wait and see. I don't want to tell anybody to be out of Amazon, but I think it's definitely a cause for concern, but I don't think it's enough concern to where I'd be like, yeah, get your ass out of there. I don't think that that's something that I would say just be all out, because you just never know. You just never know. Great point here. Amazon missed last quarter's earnings by a mile. Expectations are kind of low for this one. That's a great point. So if the bar is set low, I mean, it probably wouldn't take much for them to get up over that. So, yeah, I think that there's definitely something to be said there. Amazon may crash harder than any other stock. There's a lot of mixed. Yeah, that's what would save Amazon. What if Amazon came out and announced the split tomorrow? They joined the club with Alphabet. Could it be that Microsoft and Google eats up shares of AWS? No, I think that the space is big enough for everybody, for all of them, believe it or not. I don't think that there's going to be a market share takeover by any of them just because they are all so large. Microsoft, Amazon, Alphabet, all of them are so big that I don't think that any of them are going to be able to take over the other. I don't think that there's anything to worry about there. If you guys are just tuning in, I got about 300 of you guys hanging in. If you haven't hit the subscribe button, please consider doing that. We came in to this earnings after hours here with actually a relatively decent close to the day as far as the overall indices are concerned. But then Facebook comes in and shits the bed. They missed earnings per share. They beat on revenue, but then cited some slowing of growth. And as you can see, the stock is continuing to get hammered. It's down now 22% after hours. And I talked to you guys about this at the top of the show. For those of you just tuning in, I mean, this is going to be a continued theme. If you're a growth stock and you come in with earnings and you either miss or you make some sort of mention of any kind of slowing of growth, this is what's going to happen. To be honest with you, I was very surprised to see that this was happening to Facebook, especially with what we were seeing from some of the other FANGs. And I'm really kind of blown away. I was very wrong about my expectations here. But again, the bright side here is that this has come down so far. Facebook's on a discount right now. I do think that this is going to be a buy. I do think that this is going to be a buy here. This makes no sense for it. It makes sense for it to sell off. It doesn't make sense for it to sell off this much. What was the last time we saw Meta Platforms at 250? Let's go to the weekly chart. Last time it was sitting around this area was a year ago, January 15th of 2021. The last time we saw it sitting down at these levels. So it just gave back a whole entire year's worth of gains. And some might cite that this is because it got away from itself, or it got too hot. It started to just go crazy because of all the free money rolling around in the market. And I say that's bullshit only because of the price to earnings. Fundamentally, Facebook should be higher, period. Fundamentally, Facebook should be higher. With now their earnings per share has got to be somewhere in the mid-teens at this point, given the drawdown here. So now it's down 23%. This is wild. Absolutely wild. When it was down here, so before January of 21, the last time it was down here at these levels was September of 2020. So, I mean, that's just crazy to me. I think that they've done an exceptional amount of growth since then. So again, I think that while there's going to be some more pain here and the reaction is going to be ridiculous, I think that we always talk about this, right? Being greedy when others are fearful. I think this is going to be one of those situations. I mean, this is nuts. Crazy. Can't believe how wrong I was on that. I should give myself a little bit more credit. And I'm not going to sit here and pat myself on the back, but I don't know if anybody could have predicted a 23% drawdown. But the miss, yeah, definitely was wrong about that. I think they didn't miss this much to be punished this much from investors. But man, I mean, like I said, this is the theme. This is the theme right now. This is what happens when growth stocks in an environment that we're in, as far as the Fed's concerned and raising rates and, talking about all that. This is what happens to growth stocks. And to me, and we've been talking about this for a while, being in value and being in energy, some of the defensives, like I was talking about earlier, shoot, man, this kind of like makes a little bit of sense as to why we saw a little bit of a rotation into those today, because what we're seeing out of Facebook right now is just mind blowing. Going back to Spotify, if you guys are just tuning in and you want to get numbers on Spotify came in and actually beat earnings. They had a great quarter too. The issue here was on growth as well, though. Monthly active users, they missed just slightly, ever so slightly. I'm going to call it coming in line on monthly active users. On the expectation there, 418 million monthly active users. The problem with Spotify is, as we've talked about, is their ability to monetize their platform. They have so much potential here to make so much money. It's ridiculous, but they need to figure out how to further monetize their platform. Otherwise, this is going to be what we see out of Spotify. Let's go ahead and take a look at the chart here on them again. It is starting to recover slightly. It's up. It's now only down 16.5%. It was down around 20%, hit lows of 147.90 and now up around 155 and some change. 159 and some change. So that's maybe kind of sort of recovering a little bit. Let's check back in with Qualcomm. Qualcomm came in with an amazing quarter and actually upbeat guidance. They raised their guidance. You can see this is actually recovering. This sell-off here made 0 sense to me. So this makes me feel better to see that Qualcomm's actually starting to move back up. It's now only down around 3%. It was down as much as 8% initially on the initial reaction. That's crazy, though. Checking back in with you guys. Funny prank's gone wrong. But if Facebook is now Meta, like Alphabet is, then as a parent company organization, they can buy companies that aren't related to Facebook or WhatsApp. I don't know. Maybe. Snap feeling the burn too. I think Snap actually has good risk reward there as well. Let's take a look at Snap. Just because Snap has come down Snap's almost down to pre-pandemic levels. Almost down to that. So yeah, this is down now. Good God. Huge reaction to Snap. You guys are killing me with this. But Snap's down 20%. It's now down to $25. Let's see the last time Snap was down to $25. This is going to be interesting. Last time Snap was down here, October of 2020 was the last time that Snap was down at $25, $26 a share. Look, you can see that I've been monitoring Snap for so long that you can see that I have support and resistance lines marked down here. This is how long I've been tracking Snap. And man, that's wild. Honestly, shoot, man. I'm not saying that you should go in on any of these based off of the reactions, but how could you not just nibble off a little? How could you not just take something of Facebook or something of Snap right now? Tigers, right. Snap's moving as if it already announced earnings. 100%. Think we can agree on that. Tomorrow's going to be a red day. Yeah, probably so, especially for the Qs. Ronica Smith says this happened with Facebook before and then it goes back up. I agree. I think this is a very a very strong overreaction on Meta platforms. I just don't understand. Like, what? It wasn't that bad, you know. I maybe I'm being a little bit dramatic here, but this is, well, a little mind blowing. It did hit 246. Remember, we talked about that. 245 was what the area that we were kind of talking about it potentially revisiting. It did touch that and bounced off of it. Who knows what happens from here? Jesus. And it's bringing down everything right now. As we talked about, Snap's down 20%, but everything else is down as well. Really, I mean, just a lot of stuff. And even the casinos, Penn's down 3% after hours. Twitter's getting smacked, down 8% after hours. Even stuff like, I just had my eye on something. I'm looking at Asana's down 3.5%. Asana didn't do anything. Affirm's down 3.5%. Teladoc's down 3%. So these are all reacting to Facebook's earnings. That's remarkable. Even Rocket. Oh, no, that's not after hours. But yeah, I just SoFi's down 3% after hours. All in response to Facebook. Guys, does anybody get the feeling that, you know, this overreaction is going to be a very viable event tomorrow or even Friday? Maybe we wait till after Amazon's earnings, right? Maybe that's the play. Veronica says buying SoFi, right? Like those, I think those are probably the other really good points to be made. We're looking at, you know, instead of maybe going to chase the dip on something like a Facebook, right? Maybe it's that you look at some of the other stocks that are reacting to Facebook, and those are the better opportunities, because what the fuck did they do? The SoFi deserve to be down 3.5% because of what Facebook did? I don't think so. Snowflake's down 2%. I don't know if I would be buying Snowflake, but I'm just saying, like, there's a lot of other stocks right now that are reacting to this news, and that really makes no sense. I'm looking here. Even Disney's down 1.5%. Like, what? Yeah, this is insane, guys. This is insane. Bought that dip on Spotify sales, Gilbert. Hope that works out for you, my man. This is very true. Too much emotional trading right now, says Jeff Bonica. Couldn't agree more with that. Amazon's down 3% in reaction. Is it a buy then? I mean, I don't know. There's going to be a lot of uncertainty tomorrow. Market makers are shorting the heck out of the market right now. I'm still going to hold all I got. Yeah. We have this thing in our community, at least on Twitter. Have you guys seen Super Troopers? For anybody who's seen Super Troopers 2, there's that segment in there where that guy's like the bear fucker guy. And I made gifs of the bear fucker guy. This feels like a bear trap, guys. To me, this feels like a bear trap. I'm going to start throwing out bear fucker gifts at Twitter tomorrow. Go follow me at Own the Chaos. If we see a violent bounce tomorrow, I think that's what's going to happen. We're going to see a lot of those tweets tomorrow from Own the Chaos. I mean, it's just crazy. Teladoc's down 3%. Affirm's now continuing to fall. It's down 4% after hours, not just today. After hours, it's down 4%. What is going on here? Craziness. We got, did I say the F word too many times in a row? We lost some subscribers, or lost some viewers. Listen, I'm just going to say what I'm going to say. I got 321 of you in here, though. 101 likes. If you guys could get the thumbs up. Thumbs up if you want more F-bombs. Tammy Johnson, good to see you. Tammy Johnson loves my eyebrows, by the way, in case anybody's wondering. She's a big fan. I love you, Tammy. Do you think NVIDIA will be affected? Let's take a look. Let's see what NVIDIA is doing right now. I don't think NVIDIA is going to be affected by this, but it did react. I mean, it reacted to Facebook's earnings 100%. But I don't think that NVIDIA, the company, is going to be affected by this at all. No, don't think so. Don't think so at all. I bet you thought I forgot about that, Tammy. I bet you thought I forgot about that. That was a long time ago. Years ago now. That's how long I've been on YouTube. More F words. So we're getting more likes for more F words. All right. Yeah, the likes are coming in. All right. So bear fucker rally tomorrow. Who wants to fuck up some bears? So I think that's probably excuse me, good Lord. I think that's probably a good idea, a good plan. If you guys are looking for opportunities tomorrow, yes, the obvious answers are probably look at something like a Facebook, Meta platforms. But I think also it's worth considering looking at stocks that have moved as a result of Facebook and taking advantage of those drop-offs because they didn't do anything wrong. They didn't do anything to deserve the sell-off. Nothing's changed with those companies. So why do they need to sell off? Like, makes no sense. Makes no sense at all. So that's what I'm saying. Like, I think the overreaction here is something that I think would be worth taking advantage of. And so you could look at something like we were talking about SoFi, for example. Some really good ones that I would say that are worth taking advantage of. You know what's interesting? Apple's down after hours. It's only down 0.5%. Barely a reaction from them because they already had earnings and they were like, we're still growing. We're still growing, guys. Coinbase. Here's a good one. Okay. Coinbase is down 3.5% after hours. And to me, this is also a crime for it to be down here. This is now trading with a PE of 14.5. This is a tech stock that makes money. They report profits consistently. Here's a daily chart on this. Extremely undervalued, in my opinion. And I was never like a huge fan of Coinbase, right? Because I'm not your crypto guy. You want somebody to talk crypto with, just isn't your channel. I mean, Fat Man Zoom does dabble in crypto. We're just not experts on crypto. The market cap's at 40 billion. To me, I think Coinbase could be a good opportunity. And you might have to wait a little bit for Coinbase to start turning around for good. But to me, this seems like a ridiculously cheap stock. And this is moving down because of Facebook's earnings. Why? Right? Like, why is that moving down because of Facebook's earnings? It shouldn't be. Salesforce, another one that makes money. It's a growth company that continues to make money. The stock's down 2% after hours because of Facebook's earnings. Why? NVIDIA down 3% because of Facebook's earnings. No, I don't think so. Go look at those stocks for tomorrow, guys. Watch the move on those, because I don't think that there's any reason why they should be down just because Facebook shit the bed. Facebook's RSI on the 5-minute chart is at 522. That's crazy. Yeah, for sure. Savvy. Coinbase isn't just a crypto platform. There now is a big NFT platform. So yeah, again, just another reason why you should be bullish on Coinbase, in my opinion, given the fact that it's just come down. It's a ridiculously cheap stock and it's down 3%. To me, I think that's just a gift in my opinion. More sellers than buyers, says Vinay. That sounds like a Don Fran line. Will Microsoft react poorly to Activision earnings tomorrow? I think it maybe depends on what Activision does. I don't know if it actually reacts at all. I'm not sure it does or not. Savvy Money Shows looking for Snap. I think Snap, that seems like is it still down 20%? I'm looking at DraftKings and that's down 3.25% because of Facebook. Come on now. Come on. Snap. Snap is still down 20%. Still down 20%. Crazy. Meta, the only thing to buy right now. What an opportunity, says Kryptonite. Bro, it's hard to argue that. It's hard to argue. 20% over something like 20%? Nah. Anything on Penn National? Really great question and such good timing. I just recorded a video on Penn's earnings that come out tomorrow morning before market open. Excuse me. I am very optimistic on Penn, but you know, it was the worst performing stock in 2021, and I was very optimistic about then too. I feel like I'm talking about a lot of stuff I was wrong about lately in this stream. But I think Penn, the turnaround for Penn is certainly on the horizon. Their path to profitability is there, you know, and just watch the video. I have a video coming out on earnings expectations for Penn. So if you guys are looking for Penn National information, you will see a video out pretty shortly after this stream. So be on the lookout for that. Guys, really great stuff. Just to recap, Facebook came in, they missed earnings per share. They beat on revenue, though, and cited some growth concerns. So that's why the stock's getting absolutely hammered and dragging literally the rest of the market down with it. Spotify came in, actually had really good earnings. They beat earnings per share, still coming in at a loss, though. And they also beat revenue, but cited a little bit of a slowing in monthly active users. So that stock also got punished, and it's now down 15%. Qualcomm came in and absolutely smashed their quarter, and they raised the guidance as well, higher than expected from the street. So to me, I think Qualcomm is the clear winner here, and I wouldn't be surprised if Qualcomm opened green. That's going to be a good opportunity to scoop up some Qualcomm if that opens red tomorrow. If any selling happens on Qualcomm, I think that's a good quality company that I would certainly look for to maybe scoops up some shares, buy the dip on that one. But we got another great lineup tomorrow. We got Amazon, we got Ford. What else we got tomorrow? It's just escaped me. We got Amazon, Ford, obviously Penn National, which I talked about. But what else is reporting after hours? I'm going to be giving you my live reactions. As always, will be live at 3:45 p.m. Eastern time tomorrow. Just as a reminder, if you haven't hit the join button next to subscribe, you want to support the channel even further, do that. Become part of the Chaos Crew. Get your daily watch list from me. I put out a watch list every morning before the market opens. It's a list of 5 stocks, very detailed. I give you all the technical analysis, everything that's going on with the stocks and why I think that they're going to potentially move. And I think that it's great. It's a great value. It's less than $5 a month. And you get that from me every single day. You also get access to my portfolio as well as a private live stream where we kind of hang out and we get a lot of questions answered. We talk about whatever. That's less than $10 a month. It just helps support the channel, helps me keep doing what I'm doing as a creator. I love YouTube. I mean, I'm obviously obsessed with investing in the stock market and everything like that, but I'm also a huge just fan of YouTube and being on YouTube and being a creator. I've been doing this for 4 years. Going on 5, and I've just had a blast doing it. So guys, if you want to continue to support the channel and everything you see behind me, hit that join button next to subscribe or go to ownthechaos.com and sign up there. Tomorrow, Amazon, Ford, Snap, Pinterest, Activision Blizzard, Unity, Fortinet, Skyworks, GoPro, Skechers. There's a lot of big names here. Nokia's pre-market. We have Penn National, Merck, ConocoPhillips, Lilly, Honeywell, Estee Lauder, Cigna, just to name a few. Thanks so much for tuning in. If you haven't subscribed already, please consider doing so. Hit the notification bell to get notified when I do go live tomorrow at 3:45 p.m. Oh, and we got Freddie coming on with us too. So guys, you're not going to want to miss that. Freddie is hilarious. Thanks so much for tuning in. I appreciate you. We'll see you tomorrow. Bye. Bye.